Hey everyone, how's it going? This is Richard from TraderLion, and in today's video, we'll be talking about a really important concept, and that is how to identify market leaders, growth stock leaders, the stocks can rise 20, 50, 100, 200% in a very short amount of time. And to identify these, we'll basically be using the concept of relative strength, and here's what we'll cover in today's video. First, what is relative strength? Then we'll talk about a few subset and categories of relative strength, such as price and RS line new highs, RS phases, percentage off highs, higher lows, key moving averages, weekly closing ranges, leadership groups, fundamentals, and finally some key takeaways. And we will be covering a lot of material in today's video, so please go ahead right now and leave me a like down below and subscribe if you haven't already to the TraderLion channel. So starting things off, let's talk about, first of all, what is relative strength? So first of all, it is basically outperformance versus the rest of the market. And it's often easiest to spot during market corrections where the stocks that aren't being supported by institutions are going to be in downtrends below their key moving averages, and the stocks showing RS are going to be really standing out, making new price and RS line all-time highs, as we'll get into, or even just trending up the right-hand side of bases above their key moving averages. And what's really important is that relative strength is just evidence. We are basically building a case that stock can be a leader once the overall market resumes an uptrend and that kind of overall pressure is kind of lifted off all the stocks in the market. And the more days of evidence of relative strength, the better within a correction. And also you want to make sure that you're considering the full chart and the context of this stock and its trend when you're determining whether something is showing relative strength or not. Because as we'll get into on the next slide, just because a stock has a 1-day move, 2-day move, 3-day move, even a week-long move, if it's in a longer-term downtrend, that stock is not necessarily showing relative strength. So with that said, let's move on to one example of relative strength here. We've got Ford from earlier in 2021. We had a clear kind of basing pattern, downward channel, which it broke. And as the market was declining off highs, this stock started outperforming, starting a new uptrend, forming higher lows. And you can see the relative strength line start increasing as well, beginning that RS phase. So the relative strength line, this blue line right here, is basically the price of the stock divided by the price of the SPX or whatever index you're using. And basically, if the stock is increasing when the market is declining, if you think about that ratio, this line is going to be in a nice uptrend. And even if the stock is going flat and the market is declining, this line will also be increasing. However, if we start to see underperformance where the stock is declining more than the index or declining when the index is increasing, this line will be sloping downward. So this is a really key indicator and a really helpful tool in determining whether stock is showing relative strength or not. So with that said, let's move on first to going into more detail about what I was saying. What is not relative strength? Basically, a 1-day move, a 1-day increase does not mean relative strength. Stocks under declining moving averages can have quick bops, but these are often sold into. So just because a stock increases one day when the market is declining, that might be 1 day of RS, but that doesn't mean the overall stock is undergoing a RS phase. And stocks under declining moving averages like the 50 SMA, 200-day moving average, those are under distribution net by institutions. That's why they're in longer term downtrends. And RS needs to be sustained, ideally up the right-hand side of a proper base. So I really want to drive this point home. Stocks under declining moving averages and in longer term downtrends are suspect. And these even week-long moves back into moving averages, back into declining moving averages aren't necessarily relative strength. So that said, let's get into really the characteristics of RS. And first off, let's start with price and relative strength line new highs. So essentially, you want to pay special attention to stocks and groups as a whole, making new highs as the market in correction. That's the clear sign that they're under accumulation by institutions and are being supported, even given the market weakness. You want to scan this list basically daily to look for ideas and group themes, and this will turn you on to a whole bunch of winners even before the market comes off its lows. Here's an example with Zoom. It was making basically price and RS line new highs well before the market even bottomed, as you can see right here. And obviously we all know the story. It went on to go up 300% more from this point. Next up, we've got RS phases. So we already touched on this a little bit, but basically these occur when the market is correcting, pulling back, and then the RS line is in an uptrend. Leaders show this characteristic over and over, often before major moves, and the divergence should be fairly obvious, and the longer it lasts, the better. So here's an example I found with DOCN. You can see it had a nice move off the 50-day moving average. Then as the market started pulling in right here, this actually started increasing and showed relative strength and started an RS phase. And then after the market pressure lifted, this went on to increase a further 50% in just a matter of weeks. Moving on, we've got the percentage off highs. So basically, leaders being supported by institutions should be forming proper bases and not fall too much. And usually a base depth of less than 35% peak to trough is fairly normal. And the tighter the base with less distribution on the left-hand side is basically preferred. So you don't want to see a lot of really negative bars where it sells off 15, 10, 20% on very high volume on the left-hand side and then goes up on slightly lower volume. You want to see kind of a rounded bottom and kind of an even amount of accumulation and distribution. Here's an example with DocuSign back in the 2020 correction. This base depth was only about 30%. And there's also an example of a stock forming relative strength new highs well before the market here. And this went on to make a nice run of about, I think, 70% or so from this base. So key in on the base depth, and you want to see it be as tight as possible, really showing that institutions are basically on the bid and supporting the stock, even given the market weakness. Moving on, let's talk about higher lows and leading the cycle. This is a really important concept, and leaders will often form higher lows as the market continues to make lower lows. And also, leaders will often bottom first and lead the market into the uptrend. And here's the same example of DocuSign, but I want you to focus this time on how the market is making a new low at this point, and DocuSign, instead of undercutting this prior low, is making a higher low, showing it's really being supported at that level. And it also bottomed about 5 days before the general market and even before the falter day on the NASDAQ. So pay special attention to stocks that are bottoming before the market and are forming those higher lows as the market is forming their last pullback before a new uptrend. So that's really key. So next up, let's talk about holding key moving averages and also just key levels in general. So first of all, leaders will often hold key moving averages. That's what KMA stands for, even as the market and most stocks slice right through them. And that could be the 21 exponential moving average, the 50 SMA, the 200 SMA. It really just depends on the context of that particular pullback or correction. And basically you want to look for stocks that if the market is slicing through that, they are holding above them and showing that they're being supported even as the market is under distribution. And if we do get a significant undercut of a particular KMA, say the 50-day moving average or 200 moving average, look for stocks who undercut those same levels on a lower percentage basis versus the market. So take the 200 SMA as an example. If the market undercuts it by 10, 15%, look for stocks that undercut it only 2, 3, 5%. Those are stocks showing relative strength. And similarly, watch for stocks holding significant price levels, such as prior base pivots, those tops of bases. And if they're holding up above those, they're showing once again that price level is being respected and that stock is under accumulation by institutions. And similarly, you want to watch for stocks that are holding significant price levels, such as the 100 level, 200 level, and prior base pivots. Once again, those stocks have a bid and are being supported by institutions. And here we've got an example of a stock that kind of held moving averages as the market undercut them. And this is Apple from basically late 2021, where it held the 21 exponential moving average, this purple line here, as the market sliced through it and was just kind of chopping around. And this went on to continue to make really nice moves of about 10, 15% or so. So this kind of is just a quick example that shows you that this stock was showing relative strength and was being supported when the overall market was going through a very choppy and basically unfriendly environment. Moving on, let's talk about weekly closing ranges. So this is a great tool to use, especially during extended corrections where we're falling pretty hard. And you basically want to watch for stocks holding up much better than the indexes on a weekly basis. And during a correction, look for stocks with weekly closing ranges of greater than 40%. And as a bonus, if a stock is basically green on the week with a closing range of 75% when the market is red on the week with a closing range of only about 10, 15%, that stock is clearly being supported and is showing relative strength on that particular week. And a closing range is basically you take the high of the week and the low of the week and look for where it closed within this range. So this bar, the closing range would be about 85%. Here you've got, once again, about 75%. Here is about 25, 30% because it's in the bottom third of this range here. And this one right here would be about 5, 8% or so. So this is a really useful tool and shows you how much stocks are being supported off the week's lows. And even though this is a red week on high volume, is actually a pretty good weekend, showing subtle accumulation because of the strong closing range. You can see that on this bar, and you can see that on this bar as well, and this bar as well. Basically, you're seeing that support off the lows, and this stock, Nvidia, had a nice run out of the 2020 correction. Moving on, let's talk about searching for leadership groups. And essentially, this is applying everything we talked about already when it comes to an individual stock and name, and basically transferring that over to a group as a whole. So basically, the probabilities of a single stock performing well are much higher when the entire group and even sector is leading. And basically, you want to look for group themes and relative strength, names trending and breaking out together, and collect evidence and identify these potential leadership groups, whether it's computer software, EVs, semis, those type of groups. And looking over at this graphic here, I'm basically showing how a particular stock has a higher probability of working when it's kind of trading with the prevailing trend, where the market, sector, and group is basically all aligning in under accumulation at that same point. So lastly, let's talk a little bit about fundamentals. We mostly touched on relative strength, but I think this is a very important side of finding market leaders. And basically, you want to look for companies with new and disruptive products, large total addressable markets, and they often have standout earnings, sales margins, maybe a subset of that, maybe just good earnings, good sales, and they also likely have increasing fund ownership. And here's just a screenshot of Zoom showing really strong earnings, sales margins, even before it made that tremendous 300, 400% move in 2020. So this is really important. Even aside from the price strength, you want to look for kind of really strong results in terms of these fundamental metrics, earnings, sales, and margins. And to wrap things up, here are some key takeaways from this video. First of all, leaders may only show a subset of the characteristics we discussed in this video, and you want to look for sustained relative strength, and as we mentioned, group relative strength as well. And during a market pullback, keep noting RS day to day and search for those leaders that are showing up again and again on your relative strength list. So I hope you guys enjoyed this video. If you did, please go ahead and take the time right now to leave me a like down below and subscribe if you haven't already to the TraderLion channel. We've got a bunch of great videos in the pipeline, so you don't want to miss that. So go ahead and subscribe. And with that said, thanks so much for watching, and I'll see you guys in future videos. Thanks.